Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning pre-market webcast. Okay, so yesterday we talked, put it right in the daily chart. Bulls need to hold their advantage on the gap up and trade to new all-time highs this week. That's done. Done right here. It was a really simple day in the room for us. We didn't chase the open. We waited for the first move back that was kind of reasonable to get in, which for us was right around 79.5. And effectively we held that up into the all-time high. And, we made our numbers for the day and we moved on. I would imagine in looking at the tape and how it traded, you had trap shorts off the open, trap shorts added, they added again. And they squeezed them all day long. People are fighting price. They're not using their brain. They're not waiting for price to convert anything that matters, and they're getting run right out of town. That's what uptrending days do. That's the result of what we talked about last week, which was two tests of the 100-day exponential moving average that hold, followed by two tests, 1, 2, of the 50-day exponential moving average that hold, conversion of the daily midband, and 4 days now of support at the 9-day simple. That's called an uptrend. You can either be short or make money. You can't do both. You can be short or you can make money. The decision is entirely up to you. But anybody that chose the being short part in the last 24 hours, 36 hours, isn't making any money. And the dynamic of this is interesting heading into today. I want to show you a 5-minute chart before I show you the hourly chart that I usually show. And I want to focus on the last couple of days, and I want to focus on the overnight tonight. So here's your open right here. Couple ticks below the opening print at 74.5, they rip it, okay? I waited this all out. We got down in here with the 5-minute mid-band. We went ahead and we bought, and then, it goes up the rest of the way, which is what you had to do. You had to be patient. You had to wait till about 10:45. If it couldn't convert this area, it wasn't gonna go down. And you can see it trying to engage and just kind of being sloppy, which is what it was doing into the close yesterday. It actually chased me out of a perfectly good long at 84.75 into the close that I scratched. I wouldn't mind having that back right now. What we saw in the overnight was consistent moves since the Europe Open back to the proprietary moving average here, support, up, pull back here, support, up. Then you see the 5-minute mid-band re-engage, support, and upward. Now we're back to retesting the proprietary moving average. As long as these lines hold, we won't even be thinking short. Not even thinking short, because all it is, we call it a rinse and repeat in the room. It pulls back 2 or 3 handles, finds support, the weak shorts get squeezed out, higher highs, rinse and repeat. The whole market for calendar years 2013 and 2014 was built on that dynamic. So just on a larger scale. So until it converts those areas, my members won't see a peep from me about being short. Certainly not swing short. That's just inane. The reality is, once this market starts to convert areas that matters on the downside, there will be plenty of handles coming back into a daily mid-band test. You don't need to call the top. If you're early, you needed to say that you were wrong, and you needed to get in tune with the trend, which has been upward. Okay, let's the big focus of my webcast this morning is risk and safety and using your brain, because the way days like yesterday happen, it's a collective not using the brain by traders. I saw a little bit of it in my room, and I saw a lot of it out on the Twitter sphere, and you just can't fight price on days like this. You need to make it simple, keep it simple, stay in tune with the tape. Hourly chart. Okay. So we talked yesterday. Here's your Sunday gap up. Here's your weekly pivot was never challenged. I said back then the bulls needed a new all-time high. That's done. And now you're just seeing, like I said, it's just a steady march higher. Okay. Your hourly mid-band, okay, coming in around 87, that's a nice place to see get converted if you want to see some meaningful downside. And I think meaningful downside today is 80, maybe 74. I mean, you can't expect, the other expectation by people to get short and add and do all kinds of dumb stuff is they think it's going to fall off the cliff, that it's going to do some miraculous Wile E. Coyote off the cliff, lit on fire. Once a year, maybe that happens. But the bigger reality is it pulls back 7 or 8 handles, finds support, they take it right back up, and people end up round tripping stuff that they would have gotten out for even on, and it's just a mess. And that's how these things get perpetuated. So understand how they're perpetuated so that you can be self-aware enough to avoid the pitfalls of it. Once you see proprietary moving average, 5-minute mid-band, hourly mid-band, you see these things start to be resistance more than they want to be support, then, and only then, do you start thinking about the short side. They don't give extra points out for calling the top. They really don't. I swear. I've asked. Be smart. Okay? All right. Take care. There will be a midday update today. I was in technological hell yesterday. I couldn't even get a briefing report out, but all that's fixed and ready to go. We're back to business as usual here at Princetontrader. So I will catch everybody Instagram, Twitter for a midday update. Have a fantastic morning. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.